Let's start off with this Nvidia news. Uh, Bit of a surprise, this new Rubin platform. What was your take on it, and how do you see it impacting the chip market and the AI trade? I think that we're going to continue to see innovation from Nvidia. That's not what keeps me up at night about this company. My question mark is, are they going to be able to keep that margin that they've had, right? They've had these massive, massive margins. And the reality is you see news like coming out of AMD saying, "Hey, we're going to build, something pretty similar. It's directly competitive and coming out in the not too far future." So, yes, Nvidia continues to innovate, and that is great. They are very, very good at that. The problem is their competitors are catching up fast, all right? So you think their competitors are catching up fast. I don't know if you were watching, but we had a guest on last week that said Nvidia has like an impenetrable moat. She also gave us a forecast of a $10 trillion market cap by 2030, but that was also dependent on that. Mo, but do you think this new chip from AMD is a real rival? I had a good laugh over that clip. It was certainly dinner table FOD. The reality is that yes, I mean we're seeing this both on the Apple side and Meta and Alphabet. Some of these companies that are making these chips in house and are designing them in house, and they certainly have to know how to do so. And they have the supply chain. And then you're also seeing it with the AMDs of the world who are designing these chips. And so I just think it's going to be really, really tough for NVIDIA to keep that keep those at the percent margin. And, he talked about CEO math. A lot of CEOs are going to look at the math of that margin and say, maybe I'm going to go somewhere cheaper. So far, NVIDIA has been the dominating force in the AI chips market, leaving competitors like AMD and Intel in its wake. However, things could change for the better for AMD, according to an analyst at Mellis Research. But he thinks that the chances are less good for Intel Mellis analyst. Ben Reiters showcased his bull case for AMD in a recent research note ending with a buy rating on the stock and a $210 price target, which implies an upside of around 25% from where AMD stock is trading as of the time of this video. So let's get into why this analyst remains bullish on AMD despite how the company seems to struggle against Nvidia, and why he's not super excited about what's next for Intel. But first, if you want to keep up with AMD's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So, click the follow button. If you don't want to miss the newest market updates. Now back to today's video. You are steadfastly bullish on the semi names, the leadership Nvidia, but others as well. Why? Well, believe it or not, Kelly, this is a pocket of the market I've been bullish on for a number of years, and part of that was the technical picture was just so strong. But the technicals remain extremely strong. In fact, they've improved greatly, and now you have very strong earnings. And obviously, we all know about Nvidia now and the power of their earnings. And so, when I take the fundamentals of the earnings power, combine that with the picture of the technicals, it suggests that the semiconductors will continue to be leaders within the tech sector and can continue to go significantly higher. Doesn't mean we don't get periods of a pullback from time to time. But I think people are going to be quite surprised how much higher this segment of the market can go up. In his new research note, Melis analyst Ben Reitz said he thinks that AMD could be one of the beneficiaries of a catch-up trade coming out of the second quarter. He thinks that investors should be giving AMD more credit than they are currently, noting that there wasn't much love for AMD after Lisa Su's Computex keynote. Perhaps because Nvidia rented out a 7,000-person venue the night before and stole her thunder. He then adds that investors should keep in mind that AMD doesn't need to be Nvidia, as it's only 9% of Nvidia's market cap rates. Also notes that while it's true that the smaller company has underperformed Nvidia by 1031 points a year, to date it has EPS power that could top $8 within a few years. Ritz has pointed to a couple of factors which should benefit AMD, including that the world's most valuable company Microsoft had endorsed the benefits of its AI chips on a total cost of ownership basis, which is the cost, when taking into account indirect factors such as power and cooling demands, an area that Nvidia is known for bragging about. He also thinks that other potential positives for AMD include more orders from the tech giant Meta, becoming evident in the second half of 2024, as Mark Zuckerberg's company actually endorsed the benefits of total cost of ownership for AMD's MI300XA accelerator, which went unnoticed by many. RAs also likes the specifications for AMD's STXS Point 8 APC processes, which he called impressive and could be driving upside as soon as quarter three of this year. Plus, he got an upbeat sense from management in recent meetings he had with them. It's worth noting that the analyst also has a buy rating on Nvidia stock, and his last price target for it was $1,250. However, it's a different story when it comes to Intel, according to the analyst. But why does he think so? Let's find out. Hello, everyone, and welcome back to Investor Rightus. Thinks that Intel's plan to make a huge investment in chip manufacturing capacity muddies the waters for the stock. He wrote that not only is the Intel foundry story too complicated for the average investor, but the fact that you could just buy Nvidia and AMD companies with AI narratives and very little capital intensity just adds to the pain. Finally, he adds that Intel now primarily needs to demonstrate that its gross margins have bottomed and that it can benefit from an uptick in the PCS and servers markets. Basically, he's saying that Intel should leave the AI chip success to Nvidia and AMD. With all of this in mind, should investors rush to buy AMD stock and Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video, from your perspective, what is the correct framework that investors should be utilizing to suss out AI capex? And what is, really going to lead to growth on the R&D side versus just something buzzy to say on an earnings call? Yeah, so firstly, Shah, thank you so much for having me. I I would say, first and foremost, we need to reflect on the fact that AI is transformational. It is changing how we operate, and it is rapidly changing the dynamics in some of the technology hardware businesses that we assess and value as investors. Now, what I would say is just thinking through the timing and the sequencing of that, we're at a point now where your hyperscalers are investing every incremental dollar they can find in staying ahead of the pack as much as they possibly can on the LLM development site. And that means that if you're a semiconductor business that's aligned to server and hyperscaler capacity extension, you're in a very sweet spot at this point in time. Now, I think as we go forwards, we should expect competition. We should see some change in dynamic in that industry as we see more companies come to market with capabilities in that space, and or as we see the shift from the best-in-class, leading-edge, nano-capacity semiconductors towards something a little bit more cost-effective in the as-6 space, actually changing that a little bit. But right now, we're still very bullish on the space. We have to be thoughtful around valuations, but we see a lot of opportunity. In my opinion, both AMD stock and Nvidia stock are great buys thanks to their massive AI potential. But let's look at them separately and start with AMD. Shares of the company have risen by more than 4,000% since 2014, with the last decade likely the most crucial period in its 55-year history. This is because CEO Lisa Su took the helm 10 years ago and pulled the company back from the brink of bankruptcy. Then she led it to an impressive recovery. During that period, AMD's annual revenue rose by 32%, while operating income climbed by 169%. Much of its growth is owed to the launch of its line of Ryzen CPUs in 2017. And those powerful chips allowed AMD to consistently take market share from Intel. To put that into perspective, you should know that AMD's CPU market share rose from 18% in the first quarter of 2017 to about 33%.